Welcome to Pete's Property Podcast, brought to you by Buyers and hosted by Pete Wargent, buyer's agent, finance and real estate expert, and all-round property guru, plus published author. Join Pete for 30 minutes as he chats all things property with a new guest each week. Learn practical tips from the movers and shakers in the property industry and well-known personalities sharing their property journeys.
G'day, welcome to this week's episode of the Pete Wargent Property Pod. Got an extra special guest, a fellow POM this week, Catherine Cashmore. So I'll just run through a brief biography. So Catherine's been working in the Aussie real estate market for, I guess, about a decade and a half. Originally a Brit, like myself, but also has lived in the US. So Catherine's got a lot of experience across a range of international real estate markets, working as a buyer's agent these days, or has been for years and years, helped hundreds of home buyers, investors, developers purchasing property. Also the president of Australia's oldest economics organisation, Prosper Australia, which has conducted no end of research into the economics of land and market cycles and tax policy. And you would have seen Catherine across a range of media over the years, the Circle TV show, I think back in the day, but also publishing cycles, trends and forecasts newsletter, and also previously the author of the Speculative Vacancies Report, which is the only study in the world that looks at long-term housing vacancies based on water usage data, but a lot of market research into the land cycle and how people can create wealth from property and stocks using that knowledge. Catherine, such a long biography. Welcome to this week's episode.
Yeah, thank you for having me. I think it was back in the Circle days when we met. So that shows how long we first made contact. It was good
old days. You know, my favourite part of the Circle was when you had the Guess the Price segment. I was always a highlight of my week. Back in the day with Yumi on the show. I was an avid fan, always tuned in. So it's an absolute honour to have you on the podcast this week. So tell us a bit about, first and foremost, I always knew you back in the day as a POM with a passion for property, I think was your tagline. So how did you even get involved in real estate in the first place?
Yeah, it's a really good question because I wasn't born a real estate agent. I was... I spent a lot of my life being a musician. I was a classical musician and very serious about it. I went to the Royal Academy, the Guildhall School of Music and Drama, so all the big schools in London, and then lived in the US for a while and did a lot of performances when I lived over there, won a lot of competitions. So it was a very serious career for me. Did a lot of practice, 10 hours practice a day. And it was actually a hand injury that knocked me out of that career. So I fell over one day and fused the tendon on one of my hands. And the whole transition from music to real estate, if someone had told me when I was a musician, you're going to end up working in real estate and economics, they could have told me I'd be a funeral director because that was how much I cared about real estate and economics. But I think the analysis of understanding music, I did a lot of analysis on music, a lot of composing, a lot of understanding how music works, the patterns of music, how the different lines correspond to each other. And I think it was that really kind of shaped my brain when it came to understanding economics and getting involved in that side of things, because obviously there's numerous parts of the economy that have to work in sync together, that you have to understand how they're going to affect property. Yeah, so I dabbled around a little bit in it before I came to Australia. And then when I came to Australia, I kind of entered into it a little bit more seriously, because Australia is all about, what is Australia all about? It's all about real estate, finance and mining. So, yeah.
Yeah, I mean, I worked in mining during the mining boom years, and then later real estate is a quintessential Australian story. You've really broken the mold with your musician's background. So I guess you've worked a lot on the buy side of property, helping people to buy property. And I guess a part of the appeal there is sharing the journey with people and some of the stories and the people you meet, I guess people buying their first homes and so on. I guess those would be some of the highlights potentially. I guess, but you also must get deals that fall over or sometimes deals that don't work out. And I guess those would be some of the low lights. But do you have any sort of highs and lows that you can share with us across the journey?
Yeah, well, I didn't start out as a buyer advocate. I started out in sales, and that was really essential to do. Now, the experience of that really kind of laid the foundation for the buyer advocacy side of it, because the sales environment is all about churn and burn. And if you don't sell the property, you've got to sell to list. You basically need to list as many properties as possible, and then you need to sell them on the other side, kind of push through them. And so I gained my initial kind of entrance into the Australian market as a sales agent. And I remember entering as a sales agent and thinking, I don't know why anyone would use a buyer advocate. Like it didn't make any sense to me. I thought you just put a price on property and then, somebody comes along and pays it. And that's basically how it works. Until I met my first buyer advocate when I was working there. I cannot remember who it was now, but one of the older guys had been working in buyer advocacy for ages. Anyway, he came through and he walked all over me in the negotiation, in the deal. And so as I carried on working, I realized that the sales was all about churn and burn. I'd had enough of it. I was really ready to leave the whole real estate industry. I did not like the sales environment at all. It didn't appeal to me. And it was actually a buyer advocate that I had encountered while I was a sales agent that said, come and work on this side. Don't leave the industry. Come and work with me. That was actually one of the best move that I ever could have made, because, selling is all about, you've got a product, you've got to sell it, so you're working for the vendor. There's little analysis that needs to go into it. Once you've got a price on it, that's basically it. Then it's all about, how you do the marketing campaign and getting people through the home and how you do the negotiation. Buyer advocacy was all about really uncovering why property goes up in value, why this area is performing better than that area. How does tax affect the value of land? How does amenities affect the value of land? And then, of course, as I worked through, my initial buyer advocacy and understanding how to negotiate property and get to the bottom of what property is really worth, economics has to come into it. Because the economics of the country is obviously affects the real estate values as well. So that was really kind of how I got into it. But it was the analysis that excited me. It still is today. The analysis and understanding the historical values and the historical cycle. That's what keeps me in it. If it was just about going and negotiating property, I think I would have left it a long time ago. But I'm sure you're the same. Like I get, you get excited over statistics and the like.
Yeah, I think for me, it's seeing how areas change, and I think I've always been fascinated by how cities evolve and demographic trends, and I guess just like yourself, some of the stories that you encounter along the way. Because if you were just negotiating property every weekend, it would probably drive you a bit nuts. But it's interesting. As you know, my original career background was as a chartered accountant. I often get people say to me, I'm thinking about doing a career in accounting. What do you think? And for me, nobody wakes up probably not many people when they're teenagers thinking, I want to go into accounting. But I always say, look, it's a great grounding. If you're not sure what you want to do, get the qualification, and then you can take it on and maybe do your own business, or at least you've got the qualification. But what about if somebody comes to you and says, a youngster saying, I'm thinking about a career in property. What do you say to them? Do you give them advice? Do you say, get a mentor? Do you suggest that people might need more career flexibility these days or different expectations? What do you normally say if anyone asks you?
Yeah, well, honestly, I think that it's a good way to make money in Australia because of the way the economic environment is choreographed around the property industry. So I don't have any discouragement for people that want to get into it. But, my recommendation usually is to go and get your agent's rep course, which, as you know, is as easiest as thing that you can do. It used to be quite difficult. When I did it, it was quite difficult. Now I think it's like a week or a 2-week online course. So, get the foundation, but you've got to go and work as an apprentice underneath somebody, and you've got to learn the ropes of the industry. It's actually how it works on the ground. Having the knowledge and that doesn't give you the understanding of, how to price a property, how to negotiate. The value of any real estate agent, whether you're talking to a buyer advocate or you're talking to a sales agent, is in the negotiation. That's where the value is gained, from from our side in buyer advocacy, it's about buying the property for the best price that you can, negotiating the best deal that you can. But because for the agent, it's about getting the most money that you can. So once you get your feet on the ground and you understand that, then you can pick things up very quickly. But it's one of those jobs you just have to do. Well, like every job, you have to get your feet wet with it. So, I mean, I really would advise people to go into a little bit of the sales environment before they kind of transition across to the other sides, because it's important to understand how the tricks of the trade. And that's going to give you a lot of knowledge. Even if you decide like after a year you don't want to stay in property, that's going to give you a lot of ammunition for how you actually go and negotiate your own properties. Because let's face it, right? The way to build wealth in Australia is through property investment. If you don't have a property, you don't have the power to borrow money. It's property values that the economy is choreographed around. So, Australia's economy pushes speculative investment. That's why our prices are so high. And so if you're going to buy real estate, which everybody needs, we live on it, work on it, eat from it, you're going to have to understand, you're going to be paying a price for it. So the Australian economy is bent towards speculation. That's why we've got high prices. So if you're going to be paying a price for it, you want a good investment. You don't want to buy a property that's going to go backwards. So understanding, just having worked in real estate a little bit and understanding how that environment works is very beneficial, whether you stay in the game or not.
Yes, and it's not really a free market, as I'm sure we'll find out. Being an election year over the next couple of months, I'm sure there'll be all kinds of sweeteners and special offers and sort of budget policies that as they relate to the housing market. It's never really a free market out there. Now, people often ask me, Catherine, about the concept of the 18-year property cycle. I often get people shoot me emails about it. Not really something I have any expertise in at all. And I usually sort of flick them over to look at your work or Phil Anderson, who writes about it. So it feels to me like the outlook for the next decade, at the moment, we've got a real shortage of rental properties. Looks like interest rates are going to rise because of inflation and falling unemployment. But what do you think about the land price cycle? I've read somewhere or other that you think that the cycle might actually run until 2026, which is different from what we're reading in the media headlines at the moment. So tell us a bit about the land cycle and the 18-year cycle, and what do you think might happen over the next few years?
Yeah, so the 18-year cycle is very interesting. I mean, it really didn't come to prominence in Australia before Phil started to talk about it. I mean, Phil used to be my business partner, so he did some great research on how the 18-year cycle applied in America and the US, but the history of it goes back a lot further than that. I actually think you've written a blog on it at one point, Pete, because I remember it. Yeah, I actually remember you. If you go back on your blog, you might actually find it. You mentioned it, and I think you mentioned that we were out of it now. But just to give listeners a background, I mean, I'm a president of Prosper Australia, and Prosper Australia is obviously the oldest economics organisation in Australia, but it's also the oldest Henry George economics organisation. And Henry George was a very, very prolific economist who lived at, he published his book, which made him famous, Progress and Poverty, in the 1890s. And he kind of shot to fame. It was during a depression that book kind of came out, and it was when land ownership was very segregated. So people, there were a few people that owned vast swathes of land, and a lot of people that were very poor. And because he preached what a lot of the classical economists had preached, which was that we need to stop land speculation, but free your personal income. So untax income and productivity and tax the land. It's really from that background that the 18-year cycle kind of remained in lock key, if you like, because it was first spoken about in relation to property back in the 1930s with Homer Hoyt and his 100 years of land values in Chicago. So, what happened was, you have the Great Depression. A lot of people were wondering, why has the economy tanked? And Homer Hoyt wrote his book, where it was actually his thesis that he wrote, which was on Chicago's land values. And as he analysed, Chicago was a growing city at the time, and a massive population growth, and it was a developing city. And he noticed that there was this 18-year pattern which he wrote about in the book. And it kind of stopped there. But around the same time, another real estate valuer and economist, Roy Wenslick, who wrote The Coming Boom in Real Estate. Actually, he's written just masses of work. If you look him up, any of these authors, it's worth reading their work. But he also wrote about the 18-year cycle, but because he recognized that it applied to the US wide, it wasn't just limited to Chicago. So at that time, it was very difficult to uncover these cycles, because obviously today we are used to getting real estate data from a database. You log on to your price finder or, your CoreLogic, and you can just pick up anything. But the data goes back to 1970. Prior to that, the way that you can only get data is or the way that these people were getting data in the 1930s was scraping from real estate adverts and really going into individual real estate agencies. So it was quite a task to uncover these cycles. So the 18-year cycle, it's been around forever, but in relation to property, that was kind of the beginnings of it. It got, it never kind of really made its way out of, serious analysis. It wasn't like it came overly common public knowledge, but people that were speculating in land, Roy Wenslick became very, famous for what he did. And then, of course, you had the World Wars, the World War II that came after that, which kind of put a break in the land cycle. And then a very prominent Georgist, which was why I was talking about Henry George and the organization that I head up, Fred Harrison, did this study in the UK. Yeah, he realized that the cycle applied to the UK, but Fred was all about trying to promote what Henry George was talking about, which was this idea that we can actually eliminate poverty. That's what Henry George was all about. We can eliminate poverty if we take away this land cycle and we allow people to keep their earned income and tax away their unearned income. So the history of this kind of cycle was really under lock key until Fred Harrison got hold of it. And Fred Harrison, in his promotion, and he was a journalist, and so he was a prolific writer himself, and he's a prolific author, and also a very inspiring speaker, kind of brought the whole thing to prominence. So it was from that Phil used to work with Fred, and then I obviously have done analysis of the land cycle in Australia, that we kind of realised that the land cycle is applicable here too. So just after giving you that little bit of background, you don't. The proof is in the pudding, if you like. If you go back to the last land-based led recession in 2008, you go back 18 years from 2008, you get back to 1991, which was another land-based led recession, obviously the savings and loans crisis. And you go back 18 years from 1991, you get back to 1973, 74, which was, the oil shock, but obviously it was a real estate led recession. And then you go back to 1955. It wasn't such an acute downturn at that point because there hadn't been as much speculation in the run-up because of the war. But it was a real estate led, slowdown. And you can do that in the States, apart from the interruptions from the war, right back to the 1800s when, the US started to sell off its land. So it's a very set cycle. Now, in Australia, we've only correlated with the last 3 cycles because we've had long periods in Australia's history where we just have not had speculation. We had a massive boom in the 1840s and bust in the 1840s, and then a boom and a bust into the 1890s downturn, and then, into the 1930s, and then pretty much nowhere until we rose up from the 1950s into the 1970s downturn. So, we haven't always been a country that's relied on real estate speculation. We certainly are now. So when there's real estate speculation, which is really an urban land story, you get this boom and this bust cycle, and it tends to correlate to these 18-year cycles. And there's a lot of theory. We've done a lot of research behind it. We've looked at how it applies to the stock market. So the newsletter that I write at Cycles, Trends and Forecasts, which we can link to, under in your show notes or whatever, that really talks about it in detail and teaches people how they can speculate in property and stocks with the knowledge of that cycle. But I truly believe, so, you take out your 18 years then from 2008, we go to a peak in 2026. And then between 2026 and 2029, we're going to go into an acute downturn. And this downturn will be a property downturn. So it will be a credit crisis somewhere, and it will be related to property. You normally get a run up in interest rates in the lead up, in the 2-year sort of lead up to the end of that cycle. But then a dramatic downturn at the end. So whenever I have an investor or whenever someone comes to talk to me, that's one of the conversations we have is, how long do you want to hold on to your investment? Because the market does recover on the other side of it. And, how are we going to gain as much as we can from this current land cycle and buffer yourself for the next one?
Yes, you don't want to become a forced seller in the downturn part of the cycle, I guess. I mean, it all kind of makes intuitive sense to me, because you tend to get a kind of a big run up in property prices, then maybe a slowdown, and then a second wind and kind of a big boom, at which point everything's overheated. And as you say, the cycles do sort of seem to work in Australia. I suppose you could argue that Perth and Darwin had a different timing. I guess the resources, cities and states probably had a bit of a different sort of run-up period. But actually, if you go back 20 years and look at price growth to today, it's actually much more similar than it is different. I think Hobart's probably the best performer since 2003, and Melbourne. Actually, pretty much all the other capital cities, the other six, are very, very similar in terms of the returns. For all of the arguments about which is the best performer, they're actually quite similar. And as you mentioned there, the debate on land tax seems to be coming back into the headlines now. I think a lot of talk about whether stamp duty should be scrapped and replaced with a broad-based land tax. It's sort of started to move in that direction in the ACT, but I wonder whether we might see something similar across the whole of Australia in due course. Now, the question I really wanted to get into with you today, resident of Victoria for many years yourself, living in Melbourne, and it's really been a wild couple of years for Melbourne, probably one of the most locked down cities on earth, about 9 months worth of lockdowns. And in the third quarter of last year, we saw a record high rate of interstate migration to Queensland. I think a lot of that was actually driven by people from Sydney and New South Wales. But just looking at the stats, it looks like population of Victoria actually fell over the year to Q3 last year by maybe about 30,000. But as we know, a lot of people have left Melbourne to go to Geelong and Bendigo and Ballarat. So look, it's not out of the question. The population of Melbourne's maybe dropped by, 60, 90,000. It's a very unusual situation. Tell us a bit about the vibe in Melbourne. It seems, from what I read in the news, I'm actually due to visit next week for the first time in about 3 years. It seems that with the football coming back on and the AFL crowds, that maybe things are starting to get back towards some kind of normal. But give us a rundown of what has happened in Melbourne and Victoria over the past couple of years, and what do you think is going to happen over the years ahead? Because this is unprecedented stuff.
Because I knew that there was a downturn coming. We had forecast it in Cycles, Trends and Forecasts, starting from our first ever edition at Cycles, Trends and Forecasts, pinned the downturn for the end of 2019, 2020. So I knew that was coming. I knew that it would be potentially a recession. I didn't think it would be a major recession. I thought it would be something like 2001. Yeah, so I knew it wouldn't be a property event. I thought it's not going to be a downturn in properties. This isn't going to affect me. I'll be fine. I was thinking I'll just, ride through this downturn, and warned all my subscribers to, kind of pull back from the property market, from the stock market. Actually, it was a subscriber. One of my subscribers wrote to me and said, actually, Catherine, I think that the mid-cycle, which is what this kind of phenomenon is in between the 18-year cycle, this kind of slowdown in the property market. He said, I think it's going to be this pandemic that's coming in, this thing from China, this virus. And I didn't believe it, but who would have wanted to forecast, what happened in Melbourne? I mean, it was just a sheer nightmare for those whole 2 years. And, I was fortunate. I mean, the real estate industry did get shut down, but, obviously there were the way that it hit the economy and the people in this state has been lasting. It's made a lasting impression. So you have cafes that just haven't opened. The local cafe that I go to now is still closed for numerous days during the week because they can't get staff. And, you've got shopping strips where there's just not that have just been decimated. I think it was 1 in 5 shops in Melbourne is for lease. They can't be leased. Who wants to open a shop? Because nobody trusts that we're not going to go through a lockdown phenomenon again. In terms of the real estate market, I mean, the lockdowns were bad enough, and they really were really oppressive, and we all felt it. I mean, it was the most miserable time that you kind of went through, and particularly for people that were living on their own. I mean, just really desperately difficult to get through. But the real estate market, well, of course, it had a little bit of a wobble in the initial lockdown, but then it just went ballistic, and mostly in the regional locations. So, everybody wanted to get out of Melbourne. So we're talking about Ballarat, Bendigo. What's clear is that the way people relate to location has fundamentally changed. So city amenities and being close to the theatres and the CBD and the football and everything like that, it's no longer seen as such a value, because of course that's what land is worth. Land is worth what surrounds it. So, you value land based on the amenities that are around it. And those amenities have lost value in people's minds. And now the value is being based on topographical amenities. So coastal locations or beautiful locations, or locations that are in quiet areas where people can have a bigger house and a garden and enjoy that. I mean, it's everybody knows this, but I think it's the first time in Melbourne that I can even say now that the outer suburbs and the suburbs down the coast are going better than the inner suburbs. And that flip has never happened over recent times, over sort of since the 1970s, since we've got data to go back in the real estate. It's always been a phenomenon where people just want to be closer to the city. And if you went and lived on the outskirts, you were poor. And now it's kind of turn the tables on it. But it is true that a lot of people are leaving Melbourne. And I'm not saying that won't recover, but obviously it's not going to recover in a heartbeat. You've got immigration that will come in, and, hopefully the economy will pick up. And you've got, the government announcing these great big building projects. So I think the last one was the National Gallery, Contemporary Gallery, which is going to be the new Eiffel Tower of Melbourne. And it's just laughable, really. And we've got these great big, we've got the tallest building in Australia, vying for construction in Melbourne. So the two towers that are going on. So there's a lot of construction that's happening, and a lot of money that's being poured in to try and kind of revive the economy. But the way that people relate to real estate has changed, is starting to change. And I really feel that in the next cycle that might continue, because we will get new forms of transport that will do what the car did to the real estate cycle, which is allow people to travel a further distance in an easy commutable time. It's pretty interesting, Pete, to see it. I've never noticed anything like it. But one thing that buyers really need to understand is that the vacancy rates are higher in the kind of inner city suburbs, even the middle ring suburbs. They're a little bit lower than they were last year. I mean, there were areas like, if any of your listeners know Melbourne, but, Caulfield and Bentley, which are very high priced areas, very popular family suburbs, where we were having vacancy rates of 8%, 9%. I mean, they've come down now, they're around 2.5%, 3%. But if you go down the coast to areas like Aspendale and Edithvale, you've got vacancy rates at 1%, so you can see how it tightens. And that's your first indication of where the population is essentially moving. So, it's very interesting to witness.
Do you want to save on buyer's agent fees? You could save thousands with Buyers Buyers. As Australia's most extensive network of buyers agents, we can lock in highly competitive prices. Plus, our national network of buyers agents are some of the best in the business. So get the Buyers Buyers advantage and talk to us today. Call 1-800-975-051 or visit buyersbuyers.com.au.
I remember discussing with you years ago about some of the vacancy rates when you get new build apartments and townhouses, and maybe only one of them's advertised, but it probably represents a lot more in the terms of vacancies than you actually see in the official figures. But I mean, you can really see this over the past year or two. Melbourne CBD and South Bank and Docklands and probably Yarra, there are just loads of empty units. And I think the numbers, they're probably filling up, maybe because rents have fallen so sharply. But it's definitely a different dynamic from, I guess, what we've been used to over the years. And I know you've bought a few properties for us over the last couple of years, but I know you look at some of those. You mentioned the proximity to water and the coast has been very popular. Suburbs like, I guess, Seaford or Carrum or Bond Beach down there. But are there any sort of areas that you're particularly keen on other than that? Anywhere where you're seeing potential value for buyers or favourite areas?
Yeah, I mean, you can go anywhere in the city, in the sort of greater metropolitan area. If you go out a little bit further, even if you kind of go east and Ringwood and, Lilydale and push out into those suburbs where there's a lot of parks, and Heidelberg, that's not so much an outer suburb, but that's doing really well. Areas where there's a lot of parks, a lot of green land, and a lot of predominantly housing. So we're not seeing a phenomenon where people are moving into smaller properties, but, in the metropolitan areas, certainly those, the kind of green and the lush parks and anything that gives you that access to parkland and the decent properties are going well, and they're going strongly. Melbourne has a little bit more supply than other areas, so it has softened a little bit. Because people are moving out of Melbourne, it's not such a supply crisis as you're getting in the smaller states and territories by population. It's it's a bit of an easier market to negotiate at the moment. The areas that are still doing really well, of course, are the regional areas. So Bendigo and Ballarat and Geelong, all of those regions, you can still get very affordable priced real estate. So I'm talking from, around 500,000, upwards. And in areas where the vacancy rates are low, where the yields are pretty good, and where there is population growth, which is all going to feed into land price growth over the next 2, 3, 4 years. What I would say to people generally in terms of Melbourne is, and this is a cycle thing, really, when you look at the 18-year cycle, you see that Sydney and Melbourne do really well in the first half, consistently. They do the best. And it's the first half, if you only have to think back to the first half of this cycle, which really kind of kicked off in 2012, because we had a burst of growth into 2010 from the first home buyers boost. And then everything went flat. And then, of course, about mid-2012, things started to pick up to a peak in 2017. And Melbourne and Sydney were going gangbusters through that period of time. It was when everyone was moaning about Asian buyers that were coming up and buying the real estate, and Rudd did his 1-800, if you see an Asian at an auction, you can call a hotline. Do you remember that? You could call your kind of 1-800 and report.
Those were the days. Gosh, yeah. It's funny how things change, isn't it? Because there was a period where there's a huge amount of Chinese investment, and then that relationship seems to have soured internationally, and then the auction environment has changed. Actually, a related question. You mentioned land prices there. Now, bearing in mind, I literally haven't been to Melbourne for 3 years for obvious reasons. I've been planning to visit for so long, but it's been illegal. The land prices in Melbourne seem to have generally, as you mentioned, with zero interest rates, gone up. But at the moment, you've got detached house prices in Melbourne. In some areas have gone near vertical, but unit prices in Brisbane and Melbourne in particular have been very sort of underwhelming, I guess, over probably 10 or 12 years. Maybe more so in some areas than others, and I guess sometimes new builds distort the numbers. I've read Stuart Weems did a piece about the cycle for units and whether sort of the investment grade, in inverted commas, unit, particularly stuff that might be family friendly, maybe 3-bedroom units in some of the blue chip areas. Is there any sort of potential in that market? Because I guess things are relatively much cheaper than they are for houses, probably more so than ever before. And in some areas of Sydney, units have done well. Brisbane, we've just started to see sort of price performance in places like New Farm and some of the blue chip areas. But what's the story down in Melbourne? Any movement in the unit market, or is it still pretty quiet?
Yeah, it's a really interesting question because, anybody that knows my writing knows that I always warn against buying apartments. And that's generally because, even if you're buying an established apartment in a small block with only 12 and it was built in the 70s or whatever, the performance of those units, just like you said, has not been good consistently. It's perhaps if you go back, like if I do a study on it and just look at the repeat sales data, so what these properties have repeatedly sold for, to get an idea of the historical growth, it's barely tracked the rate of inflation. over the years. And so you compare that to even a villa unit does better than an apartment. So you compare it to a villa unit or any other property type, even townhouses, villa units. Certainly, obviously, we know that houses on land consistently perform the best, talking as a generalization. But that they've done much, much better than apartments. So generally speaking, apartments are just a poor buy. The older ones, a lot of them need underpinning, or they've got high insurance costs, and so the owners' corporation fees have gone up. They've got they're poorly constructed. Not so much in the older ones actually are a little bit bigger inside than the newer ones, but you can hear everything through the walls. They're not great properties to have. They're just a yield investment for an investor. You can just get a slightly better yield on it. But generally speaking, apartments don't do well, and that's because that they only appeal to a small buyer demographic. Your property is only worth what you can sell it for, right? So you want it to appeal to the broadest buyer demographic possible. And apartments, well, you've got mostly, I think 7 out of 10 investors that buy apartments, 7 out of 10 people that buy apartments are investors. And you've got a little bit more now with the first home buyers, but the banks are very iffy on what they'll lend for and what they won't. And, for a first home buyer at the beginning of this kind of stages of life, even if they've just coupled up in order to buy, if they have a child, then they're straight out of the apartment. It's very much a short-term home before it becomes an investment. So, yeah, generally speaking, then they're not the first thing that you should look for if you are looking for capital growth, and arguably there's better ways to balance your portfolio if you need income. Which, if you need to generate more of a yield than going for an apartment. And right now you would be better off doing that by using the cycle in other areas of Australia. So, for example, Perth, where the rents are very good and the real estate is still cheap. So you can buy in Perth, potentially ride what I consider will be a boom over the next few years, and potentially be positively geared from the point of which you buy in. You've got to pick right, but it's more important the property that you buy than it is trying to squeeze into a particular suburb. As long as you're in a suburb that's attracting population growth, that is established and is well facilitated, then you're going to do all right. You just got to choose, the right property to purchase. And apartments aren't it. But Melbourne, what I was going to say regarding Melbourne, just to kind of finish off the last question that you asked me, is that Melbourne and Sydney, they go really well in the first half of the cycle. The other states that are smaller by population, they go better in the second half of the cycle. Then they stagnate, right? So to get into Melbourne now, Melbourne isn't that, it's, people are leaving Melbourne and so we've got to ignore it. Is actually a really good market to get into right now because it has slowed down a bit. You're still going to get growth to the top of this cycle. It's a bit of an easier negotiating thing, but if you're in for a long-term hold, you could really make up that, assuming that there's not war or anything to interrupt the next cycle, coming in.
Yes, let's finish on that depressing note. If there's not another, global lockdown or something that interrupts the cycle. I think you're right. I think generally negotiating conditions are a bit easier now. There's a bit more stock to choose from. Past 18 months, there's been such low stock levels that it's been very difficult for buyers to get in. But now there is a bit more choice. And with your local expertise and the nuances of the local knowledge, you can obviously help people to buy right every time. So, Catherine, we could gossip about property news and the industry all day, no doubt, but our call stumps there as we're a bit short on time. So thank you so much for coming on. Tell us a bit about where people should go to get a copy of your newsletter, and also if they want to find out a bit more about Cashmore Co.
Yeah, well, obviously you can engage me through Buyers, which is where you are. But yeah, if people want to find out about the buyer advocacy service, it's cashmoreco.com.au. Fat Tail Media, Fat Tail. If you just Google Fat Tail Media, you'll find the newsletter there, which cycles, trends, and forecasts. There's a link to it on my website. But really well, if you really want to understand the cycle and how you can advantage from it in property and stocks, that's the place for you to go. It's a great product. We put a lot of work into it, and we've got a good subscriber base that really appreciate really kind of done well out of the information that we've given. So check it out.
Yes, and as you said, the land price and economic cycle is absolutely critical in Australia to understand. So beautiful. Thank you very much for coming on, Catherine. Really appreciate it. And we look forward to chatting again in due course.
Yeah, beautiful. I'll see you when you come down, Pete.
Oh, can't wait. Yes, I haven't been stuck in Melbourne traffic outside the airport for 3 years now. So really looking forward to that.
Yeah, you just need to, the herd will be heading out as you're heading in.
Cheers. Speak again soon.
Yeah, thanks, Pete. Talk to you soon.
Thanks for listening to Pete's Property Podcast, powered by Buyers Buyers. Don't forget to subscribe and join us next time as Pete chats all things property with a new guest. And just a reminder that the information provided in this podcast is general advice only and doesn't take into account your personal financial situation or needs. You should always consult a licensed professional to discuss your individual personal circumstances.